Now, for more on this credit card transition, we're going to go to Julie Conroy. She's the research director for Aite Group. Julie, retailers want a PIN. Credit card issuers in the United States don't require them. How important is the PIN in terms of security?
You know, the PIN is actually, if you look at the big pie of credit card fraud, it's not that important. As I talk to issuers in the payment networks, right now, counterfeit card fraud, which is the piece that the chip addresses, represents over 70% of the losses being absorbed by issuers today. Lost and stolen fraud, so somebody takes your purse, runs to the gas station or the jewelry store and uses your credit card there, represents less than 12% of all credit card fraud. So, in the grand scheme of things, the PIN is not that important. And what we've seen in countries like the UK, which went to chip and PIN long before us, the lost and stolen fraud dipped momentarily over a period of a couple of years, but then it came right back up to the previous levels, because at the end of the day, the PIN is a static data element, and the criminals are still compromising it.
Now, one thing that I thought was interesting about the kinds of cards that are being issued in the United States, they still have that magnetic stripe. So isn't that still leaving users open to fraud that way, even if they have the chip?
Well, it's in recognition of the fact that here in the U.S., we are the largest card market to go to the EMV standard. So for the foreseeable future, at least the next 3 to 4 years, we're going to still see the mag stripe on that card so that credit cards can still meet their anytime, anywhere promise and be used at merchants, whether or not they are upgraded to EMV at this point. That does leave an opening for some fraud. We've seen in other markets that the criminals will purposely damage the chip to create a fallback situation where you have to fall back to the mag stripe. So it does leave a small opening.
Okay, well, I am hearing industry analysts say that up to a third of banks in the United States actually can't really process a PIN on a credit card. Why so much disparity over PINs globally?
Contrary to popular belief, right now about 40% of the countries around the globe are chip and signature, which is predominantly what we will be in the U.S. The other 60% went chip and PIN. Some of it is driven by the technology that was in place in the country at the time. So when a number of countries in Europe, when the UK went to EMV, their telecom infrastructure was not nearly as sophisticated or robust as what we have in the U.S. right now. Instead of having merchants call out to the issuer in real time every time they wanted to get an authorization, they actually saved cost by batching all of those up at the end of the day and sending them in one big batch. Well, fraudsters quickly figured out that that represented opportunity for them, and so that was where the offline chip and PIN system that the UK has and many other countries have was developed. Here in the U.S., we have had an online real-time system for a long time, where every time we make a transaction, there's a real-time call out to that issuer. So the offline workaround that was developed in the UK isn't necessary here. And as I talk to issuers who made their decision about to go chip and PIN or chip and signature, they looked at the prospect of being the more difficult user experience in the wallet, the prospect of consumers having to remember multiple PINs, and the risk of going to the back of wallet versus the opportunity to address the very small amount of their fraud that is lost stolen today. And for most of the issuers I've spoken with, it was a pretty easy choice to go with the easier customer experience, at least in the first couple of years of this migration.